Grab Holdings is currently trading at 5.20 USD per share as of Monday, December 22, 2025 at 11:04 p.m. The stock has seen a significant move today, climbing 0.27 USD or about 5.38% during the intraday session. While most of the market is fixated on the usual giants like Nvidia stock or the latest swings in Apple stock, this double-digit percentage climb for Grab is telling a much more nuanced story about the Southeast Asian digital economy than the headlines might suggest. Most people look at Grab and see a ride-hailing company that struggled for years with profitability, but the reality hitting the tape right now is that this company has quietly transitioned from a simple app into a high-tech infrastructure play. The recent partnership with Momenta to bring autonomous driving to the region is a clear signal that they are no longer just managing a fleet of human drivers. They are positioning themselves to be the operating system for movement across 8 different countries. You might hear a lot of noise from people using investing sites or checking their individual brokerage accounts who think Grab is just a regional clone of Uber or Lyft. The expectation is that they will always be hampered by the high cost of incentives and the low margins of food delivery. However, the reality of the third quarter results and the recent December activity shows a massive decoupling from that old narrative. They just raised their full-year revenue guidance to as high as $3.4 billion and bumped up their adjusted EBITDA targets to $500 million. When you see a stock jump 5% on a day where many tech names are flat, it's usually because the institutional crowd is starting to price in a future where human labor is no longer the primary expense. By acquiring the robotics startup Infomove and linking up with Momenta, Grab is attacking their biggest margin killer head-on. If you are currently looking for investment help or managing your own capital through a platform like SoFi Invest or using Fidelity Wealth Management, you have to look at how Grab is handling their financial services segment. It isn't just about the rides anymore. Their digital banking efforts, including GXS Bank in Singapore and GX Bank in Malaysia, are seeing deposit growth and a massive surge in their loan portfolio, which is now on track to cross the $1 billion mark. This is where the tension between expectation and reality becomes most profitable for the patient investor. The market expects a delivery company, but Grab is effectively becoming a digital bank that happens to have the world's most efficient customer acquisition tool, a ride-hailing app that millions of people use every single day. Let's talk about the actual trading volume and the institutional activity we're seeing right now. On the Interactive Brokers platform and across many major exchanges, we've seen a shift in who is holding these shares. Over 55% of Grab is now owned by institutions. When you see names like Altimeter Capital and even large positions appearing in various Fidelity mutual funds and Fidelity ETFs, you know the smart capital is looking past the quarterly noise. They are seeing a company that has reported 15 consecutive quarters of adjusted EBITDA improvement. That kind of consistency is rare for a former SPAC that many wrote off as a cash burner. If you're active in self-investing through a Robinhood app or similar tools, it's easy to get distracted by the volatility of Tesla stock, but the real structural shift is happening in these emerging market leaders that have finally found their footing. The core business model of Grab is built on what they call a super app ecosystem, but I prefer to think of it as a flywheel of high-frequency services. In the most recent quarter, they saw 48 million monthly transacting users, but here is the part the average person on a SoFi trading platform might miss. Their daily transactions are actually growing faster than their monthly transactions. This means users aren't just using Grab once a week for a treat, they're using it for their daily commute, their daily lunch, and their daily financial needs. Their saver delivery and mobility options have been a masterclass in market penetration. By offering a lower-priced, slightly slower service, they've managed to capture a segment of the population that previously thought on-demand services were a luxury. This hasn't hurt their margins either. In fact, the mobility segment's adjusted EBITDA as a percentage of gross merchandise value actually improved to 8.9% because because they are getting so much better at batching orders and optimizing driver routes. Comment below how many shares of Grab you currently hold, or if you think the recent push into autonomous vehicles will actually pay off in the next 2 years. For those of you who use Schwab Intelligent Portfolios or other automated tools for online investing, you know that diversification often leads you towards these international tech plays, but you have to be careful with the competition. In markets like Vietnam and Indonesia, Grab is facing pressure from local rivals like Xing CM. This forces them to keep spending on incentives, which can be a drag on the bottom line. However, Grab's secret weapon is their advertising stream. It's a high-margin revenue stream that essentially lets them monetize the attention of those 48 million users. Merchants are paying more to be featured, and the average spend of advertisers on the platform grew over 40% recently. This is pure profit that helps offset the costs of competing in a crowded ride-hailing market. When we look at the older reports and the history of the company, it was definitely a rough start after they went public. They were losing hundreds of millions of dollars every year. But the transition in 2024 and 2025 has been focused on one thing: discipline. They've kept their regional corporate costs nearly flat while their revenue has surged over 20%. That is the definition of operating leverage. If you're comparing this to Nvidia stock or Apple stock, the growth rates are actually quite comparable, but Grab is trading at a much lower multiple of its future potential because of the perceived risk of Southeast Asian markets. But if you're using Interactive Brokers Trading or Fidelity Brokerage Services to look at global macro trends, you'll see that the middle class in Indonesia, Thailand, and Vietnam is expanding at a rate that Western markets can't touch. The future outlook for Grab is now tied to how well they can integrate their recent tech acquisitions. The Inframove deal is particularly interesting because it suggests they want to use robotics for more than just long-distance shipping. They want to solve the last meter problem in food delivery. Imagine a world where a robot brings the food from the curb to your doorstep, or a semi-autonomous vehicle handles the heavy lifting of the commute while the driver focuses on safety and service. This isn't just a dream anymore. It's a capital allocation strategy. They are making disciplined investments to make sure they aren't just the biggest platform, but the most efficient one. If you're managing your own individual brokerage account or looking at various investing sites, you'll see price targets from analysts like Barclays and Mizuho sitting up in the $7 range, which represents a massive upside from the current 5.20 USD. Of course, the risks are real. Currency fluctuations in the region can eat into profits when they are converted back to US dollars. Regulatory changes regarding gig worker rights or digital banking licenses could also create hurdles. But the overarching reality is that Grab has built a moat that is incredibly difficult to cross. They have the drivers, they have the merchants, they have the data, and now they have the banking licenses to keep the capital flowing within their own system. Looking at the intraday movement today, the 5.38% jump is a reaction to the market finally acknowledging that Grab is hitting its stride. While some investors are still worried about the net losses in the financial services segment, those losses are actually narrowing when you account for the credit loss provisions they have to set aside as their loan book grows. It's a healthy sign of a scaling business, not a failing one. If you're using Robinhood Investments or looking for the next big play in online investment, you have to weigh these fundamentals against the growth at any cost era of the past. Grab is now a real business with real cash flow and a clear path to sustained net income. To summarize the situation, the market's old expectation of Grab as a struggling delivery startup has been shattered by the reality of their 2025 performance. They are raising guidance, expanding into high-margin fintech, and laying the groundwork for an autonomous future through partnerships with Momenta and the acquisition of Inframove. They are managing to grow their user base and their transaction frequency simultaneously, while finally keeping a lid on their corporate spending. Whether you're using a Fidelity mobile app to check your balance or looking for new ideas on the Robinhood trading platform, the data is clear. Grab is no longer a speculative bet. It's a regional dominant power that is starting to show the same kind of operational maturity we see in the world's largest tech companies. The strength of the super app model is that it creates a closed loop. A user gets a ride to work, buys lunch through the app and pays for it using their Grab digital bank account, all while seeing ads for local businesses that Grab also profits from. This level of vertical integration is something even companies like Uber are still trying to perfect. As we head into 2026, the catalyst to watch will be the launch of more autonomous pilot programs and the continued expansion of their lending business. If they can maintain their current pace, the current price might look like a significant bargain in hindsight. Stay focused on the data, ignore the jargon, and watch the margins. That is where the real story is always told. Disclaimer: the information provided in this script is for educational and informational purposes only and does not constitute financial, investment, or legal advice. Investing in the stock market involves significant risk, including the potential loss of principal. Always perform your own due diligence or consult with a certified financial professional before making any investment decisions. If you found this analysis helpful, please remember to like the video, leave a comment with your thoughts on Grab's future,